obviously, I'm an Englishman masquerading as a Scotsman with a name like that. I'm also now living in Cumbria, which makes me at least Scottish adjacent. State of the nation, state of the Scottish nation, where next for financial services? I have more questions than answers on this issue. However, I do have an excellent panel who are going to come and join me on stage who will have some answers. So can I invite them, please, to come up on stage with me now? Thanks, guys. And look, you can see their names there. You're all adults. You can all use LinkedIn. So if you need to know any more about them, if you want to look at their CVs or anything, just go and look it up. We've only got half an hour for this session, so I think it's probably better if we dive in. And we've got representatives of trade bodies and representatives of successful financial institutions here. So we're going to dig into some insights around where we go next for financial services, particularly for Scotland. We'll throw in a bit of English flavour for those poor individuals who have to watch this on streaming who are actually down in England today. But I wanted to start, and I guess probably with you, Sandy. So can we talk a bit about the kind of the role and the makeup of financial services in Scotland today? What does the sector look like? And again, Alastair, you might want to come in on that as well.
Yeah, so I think, I mean, I've been in and around Scotland financial services for about 40 years, and I think the shape of it has changed significantly, but particularly since the economic crash. And coming into this job 4 years ago, I hadn't fully appreciated just how it had reshaped and how it's continued to do over the last 3 or 4 years. Obviously, there was a lot written around at the time, the impact on, for example, RBS and Bank of Scotland, etc., on the industry. Obviously, if we're, again, being honest, in terms of asset management, then over the last 10 years or so, that part of the industry has also been on a bit of a downward trajectory as a result of mergers, acquisitions, and other things that have impacted that particular part of the sector. But in some ways, that's acted as a bit of a distraction from actually where a lot of the growth has happened in our industry. If you look now at, for example, some of the big American banks that are here, BlackRock, JP Morgan, Morgan Stanley, if you add their jobs together, you're not going to be far off over 10,000 jobs. All three of them have expanded significantly and continue to do so. As of the end of next year, BlackRock moving into one of the old Standard Life Houses buildings that will be their largest centre outside the US. So it gives you a sense of that. And of course, Barclays, having gone from pretty much nobody in Scotland 10 years ago to having over 6,000 people now. And these are obviously big names, big job numbers, but the knock-on effect into professional services, into other parts of the industry, into the fintechs, etc., as we've continued to see the reshape and grow, then that's had a knock-on effect on other parts of the industry. So as we sit here today, just the numbers out just only a week or so ago, we're now, as an industry, fully 10% of the Scottish economy, almost 15 billion of GVA, growing at 3.5% a year. And employing 150,000 people directly in the industry, and paying a wage a third or so above a basic level what would be the Scottish average. So it doesn't take a lot to work through the income tax benefit for the Scottish Government on the back of that. So the industry has changed shape. I think some of the macro trends that are impacting our industry are playing to some of our strengths, and we'll maybe touch on some of that later.
Fantastic, and we're seeing that ecosystem developing with the small. I mean, we had a session before the main event kicked off with some of the fintechs, looking at some of the interesting technology coming through as well. Alastair, you've come into the role, what, 3 years ago?
A bit more, 8.
8, wow, okay, I was way off. Pretending like I knew what I was talking about. I thought it was less than that. So just talk to me about the role the ABI is playing in all of that.
Yeah, so I mean, as Sandy said, we've seen a huge amount of change and disruption since the financial crisis, but we're still here. I mean, we're in Edinburgh today. Edinburgh's GVA, about a third of that is generated by our sector, which is huge. In excess of about 50,000 jobs within the Edinburgh city region, so Edinburgh and kind of surrounding areas. So we're still here, we're doing well. Brands have been quite innovative. You've seen a lot of creativity and strong responses, but the big names are still here. We're also seeing a lot of innovation and new firms coming through. And it's just really important. I mean, in an age where we're all able to work flexibly, people are still choosing to come into Edinburgh, still choosing to come into our offices and into the environment because you get so much out of it. And that's down to the legacy that Edinburgh has as a real LTS hub in particular. And that's something we need to keep developing and drawing and building upon. Yeah, I mean, you could be anywhere in the UK, as the audience today proves. You could be anywhere in the world and still work in this sector. But there are enduring reasons why people are still coming together at events like this and still wanting to collaborate and to spark off each other and to get these ideas going. And that's really what we're seeing at the moment.
And that ecosystem I referred to as well also means you get the job mobility and you get the opportunities arising for people to move between institutions within a particular area as well, right?
Yeah, we've got fantastic opportunities to move about. You know, I mean, I'm in my role, I'm responsible for Scotland, Wales, and Northern Ireland. That's great. Lots of travel, get to have lots of fun, get to go out and see lots of people in lots of different locations. That's fantastic. My line manager's 500 miles away. What's not to like?
And so, Kirsty, Jenny, I mean, you both represent institutions that have their brands have evolved and adapted. They've changed quite a bit. So, I mean, you know, either of you go first. Just talk to me a bit about how you see the health of the sector today and that evolutionary process that you see continuing with your brands and perhaps the sector as a whole.
Yeah. Do you want me to go first? Yeah, I mean, obviously, Tom, you know, branding's hugely important in helping, you know, communicate who you are as a business, what's your core DNA, your purpose, how does it set you apart from the competition. So, you know, for me, for colleagues as well, your brand really signifies what does it mean to wear the jersey as such, you know, when you walk through the doors in the morning or log on in your virtual office. But I suppose my personal view is that ultimately whilst the brand's important, the brand doesn't necessarily make the company. You know, what makes the company is the people inside it, you know, how they go about their day-to-day activities, how do they respond to customer needs, the products they design, the services they provide. That's what ultimately builds brand equity, which ultimately is just trust. And, you know, like trust, brand equity can take a long time to build, but it can equally be lost very quickly. And I think that's particularly true in intermediated markets, such as the markets that we work in, where, you know, for example, it isn't just about, you know, our brand or Jenny's firm's brand. It's about the brand of the advisor firm, because they're making a recommendation to their customer with your brand as part of that recommendation. So I think we've always got to be very mindful and respectful of that. And, you know, so when you're undergoing a rebrand, as I'm sure everybody in this room knows that we did, you know, one of the biggest challenges you face, firstly, is, okay, how do I capture the essence of what made this company what it was? How do I retain that and keep all the bits that are important to people? But equally, what do we want to leave behind? What do we want to change about this business to make it more relevant for customers today and customers going forward? So, you know, our rebrand was also undertaken at a time of, you know, significant change in our business. And, you know, that many people would say that's not a great time to undertake a significant rebranding exercise. And, you know, some of those changes did impact upon our clients and our customers. And I think it's important up here that, you know, I recognise that. But, you know, we're committed to taking the steps to address that. And for us, you know, we were in a position where, and I'm sure you won't mind me saying, Jenny, you know, we were effectively sharing a brand across two companies. And the feedback
was a bit weird.
It was a bit weird. And the feedback from our clients and customers is, this is very confusing. We don't know who's looking after our money. So we've got a duty of care to respond to that and act and move forward. And that's what we did. And, you know, that change ultimately resulted in some mixed feedback. Who knew that disemboweled was a word? But I quite like that one, so I'll keep that. Likewise, never been on Have I Got News for You or Mock the Week. Again, that was a first, probably not common in financial services. But, you know, for me, it's all about creating that clarity, looking ahead. We're moving forward now. We've got a new brand. We've got a very clear strategy, which is very much about keeping that core platform business at the heart of what we do, but offering a much broader suite of services, that focus on integration, because that's what we believe, you know, is going to drive the capacity. It's going to make sure that people across the UK get the advice that they need and they deserve. So, you know, we're very proud of our new brand, but at the same time, we recognise that the trust and the equity in that new brand needs to be earned, and that's what we're seeking to do.
Yeah, and absolutely. I'll come back to that in a moment. Jenny, what are your thoughts from where you're sitting as a similarly? I mean, your brand, you've taken over the other bit of Standard Life, and you continue to evolve as an institution.
Yeah, I mean, absolutely. Phoenix has been, I think, quite a different journey, and it's transformed into really quite a different organisation today than it was even, sort of 5-6 years ago. Operating under a portfolio of brands, some of which are very well known and established, Standard Life, and confusion notwithstanding, but others that are less well established and perhaps have less of a strength of reputation in the retail markets, so Phoenix Life and Reassure. But that kind of broad range of business that operates under the brand, we're now also very geographically diverse, as well as being diverse in terms of our mix of business, which has been quite a change for a lot of colleagues around how you kind of operate multi-site across the group. But we're very committed to having a presence in Edinburgh and Scotland for a lot of the reasons that Sandy outlined and Alastair as well. Access to the talent pool that is across financial services in Scotland, access to the universities, the fintechs, everything, that whole kind of ecosystem and that ability to collaborate. So we will continue to have a strong Edinburgh hub.
Yeah, and again, Kirsty, Jenny, for both of you, I guess I mean, you talked a lot about the brand and getting the SMOs, but it's also about what you provide for your customers and the product evolution, and you've got to keep moving forward. You've got to keep developing the services to stay relevant in what is quite a challenging environment, right?
Yeah, absolutely. And I think for our business, coming back to the point about the Edinburgh hub, and as Jenny was saying, particularly in long-term savings and investments, I think you made this point as well, Alastair, we're actually, it's probably the one part of the market that is not as London-centric as others. So I've always found, working in both Edinburgh and London over the years, London for me was almost the centre from an asset management perspective, but Edinburgh, and also, to be fair, the southwest of the country, the kind of Bristol, Southampton area was very much the centre of the kind of advised platform or fintech markets. So, and you're seeing those springing up in other parts of the UK now as well. So, but yeah, I think you're spot on. It's about what you provide, and sometimes you need to make a change, whether it comes to your business strategy, your brand strategy, to ensure that you can remain relevant for that next generation of customers and clients that's coming through.
So to that vein, and I'll just open this up for anyone to jump in on this. So we're hearing more and more, both from politicians and from regulators, about, well, I guess it starts partly with the advice gap, and then it starts to feed into financial capability and financial inclusion, and then we hear more about the need for consumers to take risk, but how do we help them with that? So, I mean, I think the politicians and the regulators recognise that there is a huge challenge for the financial services industry and how it serves its customers, particularly those customers who aren't customers at the moment, and how do we reach them? So I'd be interested in your thoughts about how the industry rises to those challenges that are coming down the tracks at us. Who wants to go first on that?
I'll maybe take the financial inclusion piece, because it's something that we're doing quite a lot on, and I've spent quite a lot of time on it. I think the industry does need to step up to the challenge. I mean, I think that Scotland, when you look at some of the FCA figures, we have a disproportionately larger problem than other parts of the UK. And particularly, the first stopping point for many people is to have a bank account. We reckon with the FCA there's probably at least 100,000 people in Scotland who don't have access to a bank account for a variety of reasons. Some of that might be choice, a very small number, but most of it's to do with around their position in society, their nervousness about dealing with financial services institutions, quite often concerns around about data, financial literacy, digital exclusion. Quite often their main point of contact sits in the third sector. All these things makes it's quite a complex issue. And of course, without a bank account, then there are a whole range of knock-on effects around things like securing employment, good employment, fair employment, etc., etc. So one of the things that we're doing with the third sector, with the banks, with the FCA's support, is to try some stuff out in Scotland around how do we really materially address our unbanked population. And there'll be a number of things coming, we'll be trialling out next year to try and do that. But that's about bringing together the system. And let's face it, we've shown that we can do it. The Ukraine refugee crisis is a perfect example where all of a sudden all those barriers fell away, and people who arrived in this country were able to open up a bank account. So we just need to make that the norm, and that's one of the things. And the reason I make a point about that is because unless you've got that entry point into the financial system of a bank account, then you don't have access to anything else. And then it takes you into things like insurance, it takes you into things like savings and everything else. But you need that entry point, which is the bank account.
Yeah, I absolutely agree with that. Sorry, Jenny.
Yeah, and I think when it comes to long-term savings, you know, auto-enrollment has been a fantastic success at bringing more people into pensions through the workplace. But I think it's widely recognised that there's more that needs to be done, because most of the people become double defaulters, so they default into the arrangement, default into their payment amount, but then don't know what to do next. We know there's a retirement savings gap. We know that risk has largely been transferred from organisations onto individuals. And actually another Scottish-based piece of research on that recently between the Institute and Faculty of Actuaries and the David Hume Institute looked specifically at that. So how do we help to equip those customers to then make further decisions around, well, how much do I need to contribute? How am I going to access my pension? What other things do I need to think about as I'm saving? So I think there's a massive opportunity for the financial services sector and the advice sector to help individuals with those quite complex decisions sometimes.
Yeah, I mean, part of that is, I absolutely agree with that. And, you know, yes, we need to get the bank account sorted. Then we need to build up that financial resilience, having a little bit of reserve cash in the bank. And you can't really talk to them about risk products and investing until you've got that box ticked. And then insurance is part of that as well, isn't it? Because people need to have their insurances in place. Again, if you want to, it's a lot easier to start taking risks with investing and more complex financial products if you've got the basics covered, right?
Absolutely. And, you know, so I joined 8 years ago. I'd worked around the industry before that, and all that time advice and guidance was a boundary that just kept getting discussed and debated. You know, we're at a point now where we're hopefully going to see new regulatory framework soon, and we'd expect that to look at things like targeted support and simplified advice. And there's certainly a role for platform providers in that, in terms of if they want to go down that road and get those permissions, and they could get involved in that. But, you know, we don't help ourselves. The language is quite technical. It can be a bit exclusive. You know, if you're in that position where you think you've got some pension pots, you're approaching that point in life when you need to start thinking a little bit about it. You know, you don't even know what annuity is. You know, there's some really fundamental challenges out there, so we need to get better at explaining and discussing. And there's no one single silver bullet for that. Although I would propose a blonde bullet in the form of Step Up, Miss Gemma Collins of The Only Way is Essex. Big fan of yours.
Pay your pension some attention.
Pay your pension some attention. So Pay Your Pension Some Attention, the whole Pension Attention Initiative is a cross-industry campaign, lands every autumn. So first year we went with Big Zoo, celebrity rapper and chef. Celebrity chef and rapper, beg your pardon. And he rapped about pensions. That was mind-blowing. Second year, Timmy Mallet, taps into that.
Bit of a pivot there.
You say that. Listen, you got more laughs than Big Zoo, so obviously there's a strong demographic in this audience that recognises Timmy Mallet and what he achieved in life. And again, it's just finding different ways to reach out to different communities. And then this year we went big. We went for Gemma Collins, completely different. If we'd done a bit more due diligence, we might have found out that she actually doesn't have a pension herself. But by golly, this has just completely focused her attention.
It's a conversation starter, right?
Yeah.
Absolutely. And you know what? Just talking to kind of friends, family, especially kind of younger ones. Big Zoo, yeah, bit of resonance. Timmy Mallet, Timmy who? Gemma Collins, that's where it's landed. And it's using those kind of people as well as the professionals in this room and further afield. But we have got to get better at segmenting and using different channels and different media and talking to people in different ways about this, because it's just getting ever more complex. There's a deficit in terms of financial capability. So it's not a literacy thing, it's a capability. Are you capable of understanding it and working through what you need to do? And we just need to get a lot more creative and a lot more diverse in how we approach that. Gemma Collins is one strand. I like to think of myself as another strand. We may cross over at some point.
Nice. Going to leave that mental image.
One of the things I was just reflecting on as Alastair was talking there was I think for me, just this point around understanding the outcome that people are trying to achieve and the stage of life that they're at is so important, because I think quite often in our industry we tend to want to go down a product route quite quickly. So we want to talk to people, what are you doing about your pension? What are you saving for your retirement? You know, if you're a 21-year-old, 22-year-old, or even a newly minted 40-year-old, I'm not really thinking that much right now about retirement. I'm thinking about, okay, how am I going to pay for this new house that I've bought, or how am I going to, take my family on the next holiday? So I think it's more about how do you instill that savings mindset and savings culture, and accept that for certain people in society today, a pension potentially is maybe not the right type of product for them at this point in their life. Also got to bear in mind there is a cost of living crisis going on. People are struggling to save. So perhaps putting money in a vehicle for some individuals that they're not going to be able to access until they're in their, at this point, mid-50s onwards, maybe that's not the right solution. But equally, it's our duty then to think about, well, what are the different products and innovations we can offer to start to encourage that savings habit earlier, through ISAs, for example. How many people aren't using their ISA allowance in the UK? So I think trying to move away from that product focus more into the outcome of the individual and what they're trying to achieve.
So I'm going to come to the audience for questions in a minute. There's just one other area I want to explore before we go there. And I think, the good news is we've got a pensions review going on at the moment, so the government's got the door open. They're open to ideas and thoughts around how we address some of those challenges and the question of pension savings adequacy. So, Alastair, we were talking just before we came up on stage about the budget that's coming up, and so how much of an issue at the moment is there that we're all just kind of holding our breaths a bit at the moment because we're not sure, there's been a slightly negative tone coming out of some of the government communications in the first couple of months, and so we're all a little bit nervous about what the budget's going to hold, and so everybody's just kind of holding back and not committing to whether it's commercial activities or clients with investment activities. So, does anyone want to comment on that? So how much you seen that as a problem?
Yeah, so you and I were talking before we came up, because we've both gone to Liverpool for the Labour Party conference, where you had Prime Minister, and you had the Chancellor, and you had the Economic Secretary to the Treasury, and you had the Secretary of State for Working Pensions, you had the Pensions Minister, all these people. And any time you asked them anything of substance, they said, I have to wait for the budget, I'm afraid, October 30th. And that's fine, you get that. But in a year where you've had so much kind of change already in terms of the general election, you've obviously got a new governing party with a different set of priorities, and you're being told wait until October 30th, when you've still got a gap in things like, so the abolition of the lifetime allowance. I think there was, fairly widespread agreement about that. But the supporting regulations haven't caught up with that. So you're in this perverse situation where, in some cases, HMRC advice to savers is don't take your pension out.
How does that work? Yeah.
Things like that need to be addressed. And so having to wait until the 30th of October isn't helpful, but it is what it is. But, you risk having a delay in terms of decision-making then, and then a rush of decision-making afterwards. And again, as you were saying, it's just ahead of a US election, which could point, the global economy in a different direction.
Sandy, is it an issue for your members at the moment?
So I think I would add two things. I think one thing we're picking up from a number of our members is the people's behavioural change leading up to budget. The number of inquiries, for example, about taking tax-free cash from pensions has just gone up substantially, and people in the rooms probably see that. But because people are unsure as to where all that's going to lie, I think at a more macro level, I think what we're saying is and this applies to the Scottish Government too. There's a lot of good words around economic growth, but there's been very little of substance around actually what does that look like. I think that some of the things that are being trailed are more likely to act as a dampener to economic growth rather than stimulating economic growth. So I think there's a lot of alignment around policy that they need to do that actually to back up what they're talking about.
What are you alluding there? What do you think might actually suppress economic growth?
Well, it's not, none of this will be a non-political, it's just not a political statement, but, a lot of the things around about, for example, non-DOMs, as an example, you've got the whole thing about capital gains tax and equalising income tax. All these issues are potentially going to have a negative impact on future economic growth, but I'm long enough to remember a lot of budgets. I've never known a budget to be trailed for as long in history. We're still 4 weeks away, and this stuff's been trailing around for about 6 or 8 weeks already. And people, there was a report out today just from the retail consortium saying, they've just seen a drop-off in confidence and spend in the retail environment because people are unsure as to where it's going to end up. So it's, there could be a lot of damage done between now and the 30th of October.
That's interesting. Well, I don't think they're going to bring it forward for us. So what would you guys like to see in the budget? What's on your wish list?
It's maybe more.
Nothing. Could they just do nothing?
Yeah, well, no, I think something more than nothing is going to happen. But I think anything which almost undoes a lot of the good work that's already been done to date to encourage people to save more and that makes that less appealing, I think that would be a bad thing for a whole host of reasons, not just sort of from a provider's commercial reason, but more societally and for people actually being able to retire when they want to retire. So that's what I would hope, that we don't end up taking a backward step and making it harder to engage with people in a conversation about saving, because as Alastair and Kirsty were saying, that's difficult. We want to move to a place where you can talk to customers more about the outcome they're trying to achieve. But if you then don't really have the tools to make that easy, to make that appealing, then that's going to be an even harder conversation.
Yeah, I agree with that. I think they've got a fine line to walk. Does anyone else want to come in on there?
I think a public-private investment in infrastructure, I think we're way behind other similar nations on infrastructure investment. Obviously, everyone knows the connection between infrastructure investment and economic growth, and we're way behind where we need to be at UK and Scottish level.
So, I mean, we heard a lot of that in Liverpool, didn't we? There's a lot of talk about, I mean, particularly the pension fund capital, we're going to drive investment. But I've also been hearing Rachel Reeves saying they're cancelling projects. So, but I mean, they're talking a good game on the infrastructure stuff, right?
Yeah, absolutely. So the Labour Party's got these 5 missions, and 2 of them are absolutely fundamental. There's the kick-starting the economy and driving enough economic growth one. There's also this kind of clean, green superpower narrative, and certainly pensions and long-term savings investment, absolutely central to that. There's huge demand now for pension investment. But you've got to take a stop and think about that and say, okay, we get that, but the firms in this room are stewards for pensions. Not really the pension owners, they're stewards delivering the value for savers. And we really need to make sure that whatever happens and whatever routes we go down, it's the right and the proper outcome for savers in terms of value and in terms of security, rather than just tackling discrete parts like costs or whatever. So, Sandy's already mentioned the speculation about tax treatment of drawdowns from pension pots. That's something that's in the ether. There's a bit of chat around whether pensions should be subject to inheritance tax. So if you inherit a pension pot, does that get hit by taxation? Possibly. There's been a lot more discussion, and I think there's something more concrete coming around the tax treatment of employers' national insurance contributions. Okay, you go down that road. Does that then drive down pension contributions by the employer to the minimum rate? What's the incentive for them doing anything above the minimum? And then what impact does that have on the consumer, or in this case, the saver? So there's lots of that kind of stuff bouncing about, but you really need to actually have a holistic approach that says, okay, there are operational things we could do here. There are kind of outcomes that we could achieve. Is this actually going to deliver a better outcome for savers? That should be the marker by which all these things are measured.
And my worry on that is that Rachel Reeves is looking at it from a fiscal spending point of view rather than from a pension outcome point of view.
Yeah, I think that's fair.
And I think that would be the one thing I wouldn't want to see is that it's a budget that effectively penalises those who've taken that responsibility, who've saved over a number of years. And I understand that the government has a tough job to do, and they need to balance the books at the end of the day. But at the same time, they can't try to support one segment of savers to the exclusion or detriment of others. So for those who are already in retirement and in decumulation, I don't want to see a budget that penalises those individuals. And I think from an operational perspective as well, selfishly, we want sufficient notice to be able to implement changes and implement them properly and in a controlled manner. And I think, especially when it comes to very technical areas such as, transitional relief, so how, both for advisors and for ourselves, how do we effectively manage that and implement that? And again, having that sufficient notice and engagement is really important as part of operationalising that safely.
I think the other thing I would say, just on talking about pensions, is the huge elephant in the room that never gets discussed is unsustainability of the public sector pension schemes. And that's
I'm not sure this government's got any appetite. to go.
no government will step up and be honest with people about the fact is that there's this huge liability sitting over here that is unfunded, and no one's prepared to step up and do anything about it.
Well, and also it's difficult because shifting from unfunded to funded means you've got to pay twice for a wee while, and so any transition has to be very slow. But yeah, look, we're almost out of time. Does anyone have any burning questions? Any hands in the air? Want to ask the panel any questions? Nat, any important questions online we need to talk about?
There's one question, and I'll kind of, I'll just project. I'll just paraphrase the question that's come in. It's probably for, thank you. It's probably more for Kirsty, actually. So you talked about the rebrand earlier. You might have guessed this might have come up. But the advisor in question said they kind of put it to their clients about the Aberdeen rebrand, and clients, putting it kindly, didn't quite get it. So I guess I'm kind of interested from your perspective, when you're in the eye of the storm, you know, when you're there on Mock the Week and Have I Got News for You, is there ever a moment where you're like, should we just go back? Should we just go back to the old one? Or is it kind of more an opportunity to reset a brand that's been around for a while? I mean, where was your kind of head at as a business when you were going through all of that?
Yeah, I think, well, first of all, thank you for the question, whoever it was that asked it, thank you. I mean, without wanting to kind of repeat what I said earlier, I think there was probably two aspects for us. There was an element of whether we wanted to or not, there was no going back. So I think it was a moment of truth in terms of this is about looking forward now and how do we move forward. And we felt at that time the best way to move forward was to establish clear separation between the brand that we would be operating as a business in going forward and the brand that would be operating going forward as part of Phoenix Group. And that was directly in response to feedback from clients and customers around brand confusion. But I think also for us, we did see it as an opportunity to reset who we were as a business. We don't want to lose, as I said earlier, what the aspects were that made us who we were and why advisors chose to partner with us in the first place and why they recommended us to their customers. But at the same time, we want to become more than a platform. We are no longer, a provider of life assurance. We haven't actually done that for a number of years. So for us, it felt like the right time and the right moment in our evolution as a business to move away from that sort of branding and take that opportunity to move forward. But that's a difficult process. It was a difficult process for colleagues. I've been with the business for 18 years myself, so knew and loved that brand. But ultimately, it's about looking forward now and what we do with that and what we deliver, I think, for our clients.
Thank you. And on the subject of moving forward, I'm conscious we've already run over time, and I'm going to be upsetting Steve and Rich if we don't get off the stage now. So can I ask you all to give our panel a warm thanks for their contribution?